Today I'm going to talk about a trading technique to help you increase your profit and win rate. Most of the time, the trade won't go your way. There'll be a lot of noise, games being played, the market is rigged, greed, fear, missing the perfect moment, and the market will most likely humble you. However, it's possible to outsmart the market, increase your profit and win rate with my personal technique, which I call the SMART No Stop Loss method. So to learn this technique, we will go through first the characteristics of a hot and safe stock or index. Second, trading in the direction of the general trend. And third, timing the trade entry at the weekly or monthly low or high. Each subject will be accompanied with a real example. So first, a hot stock or index is a stock that you want to be in for X period of time because it will outperform all the other stocks percentage-wise. And to know which stock is hot, you kind of have to get the habit of reading business news every day or be in the trading or business news community, just like Twitter, for example. Let's go over examples of hot stocks. So Bitcoin was an example of a hot stock because if you had Bitcoin on March 2020, which was priced at around $6,000, and you held it for a year till April 2021, which was priced at around $60,000, then you would have basically 10x your money, which is a pretty insane return on an investment. And the context was that when COVID hit, everybody was sent at home, so people had the time to spend on Twitter. And what they learned was that Bitcoin had a fixed supply, as opposed to the fiat currency, like the US dollar, which was being devalued because of government money printing for government handouts for people who basically lost their jobs because they had to stay at home. So the buzz was around this new digital gold, Bitcoin, acting as a store of value against inflation and money getting more worthless. So another example of a hot stock was Tesla just last month, around April 21st. If you had a position at around $225 and held it for a month till May 20 at around $355, well, you would have made around 50% in just a month. And the news driving the uptrend was that Elon Musk was going to step down from Doge and spend more time with his company. And obviously, riding the wave after Trump's election win on November 5th would have netted you around 75% because, as we know, Musk supported the Trump campaign. Raytheon was an example of a hot stock starting October 2023, and the event that propelled the uptrend was actually October 7th. And if you held the stock for 18 months, you would have netted around 100%. Baba and other Chinese stocks were hot earlier in the year because around the week of January 13th, it was around that time that China released the ChatGPT rival DeepSeek. And in the case of Baba, the stock got propelled by around 80% in under just a month. Now that we know what is a hot stock, what exactly is a safe stock? A safe stock will generally have a high market cap. Microsoft, for example, has a market cap of around $3 trillion. Nvidia, Apple, Amazon, Google, Meta, Tesla, and others are all in the club as well. Obviously, the classic like NASDAQ and the S&P 500 are also considered safe. They're safe because most of the time, they will recover and make new all-time highs, unlike pump and dump stocks. Let's go over a few examples next. So NASDAQ is considered safe compared to the worst, which we will see later, because it has a huge market cap, and whenever it dumps, it always recovers and makes new all-time highs, unlike pump and dump stocks. And as you can see, the chart here has an upward trajectory. So DOT, or Polkadot, a crypto, is an example of a pump and dump, or a rug pull. At the beginning, it's newly listed, there's buzz on social media, and the people who don't know about trading, they jump aboard the pump, and then the insiders, they dump it. When they dump it right after, it stays dead for a really long time, like in this case, about 3 years. 3 years of sideways price action, trapping all the new people who didn't know when to exit. Here's an example of another dead stock. So this one is Internet Computer, and just see how its sideways price action for 4 years now. So when it's listed, it just dumps, and then it traps all the people who bought over here, and it basically doesn't recover to new all-time highs. So I want to show BlackBerry because the chart looks like a pump and dump. And for those who don't know, BlackBerry used to be a successful Canadian smartphone maker in the 2000s. And this is to show that nothing is eternal. Everything has a glory moment in the fall. And what may look like a reputable and strong company with a huge market cap will eventually dump and stay dead for a really long time. Like here, it's been dead for a decade and more. And just to show you, same thing is happening to Moderna, and same story for Pfizer. Now that you know what is a hot and safe stock, I just want to end with another safety note. Whenever you pick your stock, don't put your position at risk of being wiped out. Meaning, when you play options, give yourself time and play in the money. And if you're using leverage, don't use it too much. Like for example, NASDAQ, personally, I go with 2x or 3x. 3x is pretty insane, and it's TQQQ if you want 3x NASDAQ. The second characteristic of the smart no stop loss method is to trade in the direction of the general or market trend. The market trend is dictated by the S&P and NASDAQ, excluding some sectors that sometimes can be independent or be immune by the market trend. And to know the market trend, watch for the closed weekly or monthly reversal candlestick and trade in a direction accordingly. For example, here on May 2025 or April 2025, we see a green hammer monthly candle, which suggests a reversal for the next month. And here on February 2025, we see a reversal, a shooting star monthly candlestick, which suggests the next month should be red. Now sometimes by the time you wait for the weekly and monthly candle to be closed, you can miss out on most of the move. If you want to detect a change in the market trend earlier, monitor for a closed daily candle at major support or resistance level or at major trend lines. For example, we see here the S&P 500 SPY, and I drew this trend line that started from October 2022, and this is the second point, October 2023. Okay, so as we can see, we are on a daily, and we see that the closed daily candle, the price got closed above the trend line. Okay, and that was a signal that we hit a bottom. If you watch on the futures of the S&P 500, just to double check, you'll see the same story. So the trend line was drawn perfectly, and we see on the daily the price got wicked below the trend line but eventually closed above the trend line. That's what we want to see. You want to assume continuations for candles following reversal until you see otherwise, like a closed weekly or monthly reversal candle at important levels of trend line, exactly like we talked earlier, but in the opposite direction. So the key point, okay, to remember is to be disciplined in waiting for closed candle, to show up right before the candle closes to analyze and potentially execute buy or sell. A candle has a low and a high. The third characteristic of the smart no stop loss method is in an uptrend, try to time the trade entry for the weekly or monthly low, and for vice versa in a strong downtrend, aim for the trade entry, try to time it for the weekly or monthly high. So to explain this, I will take an uptrend situation. So even if you miss your entry for the weekly or monthly low and it dips further, okay, all you need to do is to wait till the candle closes at Friday 3:59 p.m. for the weekly high, or 3:59 the last day of the month for the monthly high, provided that you did trade in the trend direction and that you chose a safe index or stock. Like for example, here in the weekly, suppose that you did take an entry for May 5th. Suppose you did your entry right here and it dips further. Don't panic, okay? Because this is an uptrend. This is a safe stock. Don't panic. Just wait till Friday, end of day, like right here, and you would have been break even. At the start of the week, analyze plans so you execute your plan during the weekday. What are the potential levels to catch on the weekly and monthly low or high? Little side note, the high and low indicator, like this one right here, can be useful. Draw your levels and set the alerts. And during the weekdays, when your alerts are triggered, monitor the chart again, double check, and then execute. Choose your position size according to your risk management, and if price don't go your way, then you still have cash for the next level. The key thing is to plan. A quick note, in an uptrend, not always but most of the time, it would make sense that the beginning of the week or month would be to set the low of the week or the month, and the end of the week or month would be to set the high. Okay? For example, in NASDAQ for the month of May 2025, the monthly low right here was set during the first week of May, as we can see in this candle. Okay, and then it went up. Another example, okay, where this would not apply, for example, for silver, as we can see during the month of June 2025, here on the daily, we see we're on May 30, and on the first trading day of the month for June, it did not set a low, it just immediately gapped up. So that's another possible scenario. If anything is not clear, do not hesitate to leave a comment. Let me know if there's a topic you want me to cover. And if you need comprehensive courses, please check the affiliate links in the description box. Don't forget to subscribe to keep learning more tips, and have a nice day.